When does it make sense to make an S Corp election? This is a question I hear from business owners all the time, and I think there's a lot of confusion around S Corp elections and S Corps in general. So I wanted to record this episode to go through when it might make sense for somebody to make that S Corp election and kind of the circumstances and thoughts that go around that. So we're going to go through what's the big deal with the S Corps, when we should elect them, downsides of maybe electing an S Corp status, how to do it, and then talk about who shouldn't elect an S Corp. S Corp election, let's talk broadly what that means. So most people operate a business as an LLC, limited liability company, or a sole proprietor. Most businesses start out, you contact your state or LegalZoom, however you form your LLC. When you have self-employment income to just yourself, real estate agents is a really good example. Typically, they're just getting self-employment income from their brokerage. They're not getting income through a business typically. But when you get that income, if you're just an LLC or a sole proprietor, that income is subject to self-employment tax. Most people listening to this have had a W-2 job, a normal job. You'll kind of see there's deductions coming out of your paycheck for Social Security and Medicare. So 6.2 for Social Security, 6.2%, 1.45% for Medicare. So it's 7.65%. That is your employee portion of self-employment taxes or payroll taxes. The employer portion is paid by your employer. So when you are a sole proprietor and LLC, you pay both sides of that tax to total 15.3%. So you'll pay that plus your federal rate and your state rate on any self-employment income. So it's a lot of tax. So what does an S Corp election do? Only your salary is taxed that way. So with an S Corp election, you essentially partition your income so that part of it is going to come to you through payroll. Just like you're going to pretend you're paying both sides of the tax, you're paying employer and employee. You're running this through a payroll processor like a QuickBooks. We'll talk about that. You're going to get a pay stub, right? It's going to be just like a normal job. The other portion of your income, though, that isn't going through payroll is going to come directly to you just as an owner's distribution or an owner's equity draw. That portion of your income that's coming directly to you is not going to be subject to that 15.3 self-employment tax. So we'll do a really oversimplified example. If your business makes $200,000 and you make an S corporation election, and $100,000 is ran through payroll, and the other $100,000 is coming to you as an owner's distribution, you will save, just again, to oversimplify, $15,300 of self-employment tax on that $100,000 that's coming to you as an owner's draw. There's lots of other stuff that goes with it. There's payroll costs that are going to decrease those tax savings, right? There's some additional tax forms you have to file. So just to oversimplify it though, it is a very powerful strategy that a high income sole proprietor LLC, we can save a lot on taxes. So when does it usually make sense to make this election? Broad rule of thumb, again, way overgeneralizing, not knowing your specific situation, but if that net profit is over $50,000 generally is the number I like to use, we start to look at this. If it's over 100, I think it's most people would say kind of a no-brainer. If you look online, some people will say 100, others will say lower. So 50 to 100 grand, something in there. I think at that point, we're starting to get into the area where it's definitely going to be justified to increase your cost and complexity of running payroll and tax filing. We want to make sure profits are at a certain amount. We also want to make sure maybe those profits are like somewhat steady and increasing. So if we have one good year, and we make 100 grand, and then next year we're like not going to work that much on our little side hustle or something and not make 100 grand, like we don't want to all of a sudden put ourselves on payroll for $50,000 when we're not going to have that revenue coming through. So know your business. Like, is it going to stay steady? Is it going to continue to increase? Those are really important things. Also, we need to be able to justify a reasonable salary. Like, we need to be able to reasonably pay ourselves. What would it cost for us to hire ourselves? So again, super industry business dependent. Also, like if you only work 5 hours a week in your business, right? That theoretically would cost less than to hire somebody in that capacity than full time. To like overgeneralize again, if you run I'll just use myself, a financial planning business, and comparably, if you look up CFP salaries and it says they're $70,000, you can't make an S Corp election and pay yourself $10,000. So I've seen this mistake before where people will make an S Corp election and actually not put themselves on payroll at all. They don't even have payroll. They just make an S Corp election and take the whole profit as an owner's equity draw. So that is definitely wrong. It's the wrong way to do it. If you do get audited, if and when, the IRS will probably levy some penalties and back taxes on you. You have to have a reasonable salary. So there's tons out there you can do. You can hire a CPA firm to do a reasonable compensation study. Probably not necessary. You can do a lot of research on your own, come up with a reasonable salary that you could totally look an IRS agent in the eye and defend. That's usually what I tell folks. Again, this is not tax advice. I'm by no means a tax expert, but I have a lot of clients that this is relevant to. That's typically the conversation we have. Is there documentation? Why are we paying ourselves this much? Could we look an IRS agent in the eye and show them the data as to why we have this set salary? I've talked about how S Corps are awesome, right? Everyone should do one. What are the downsides of an S Corp? Well, there are downsides, right? There's some cost, there's some friction. So more paperwork and admin is the big one. You need payroll, like a real payroll processor. Gusto, I use QuickBooks myself. Lots of folks I work with do. So a real payroll processor typically costs anywhere from $30 to $70 a month. So there is an increased cost there. There's going to be separate tax filings. So the S Corp files an S Corp tax return. And then you're going to have an owner's distribution that's going to come to you from a K-1. Typically, you're going to use that to report your owner's distribution on your personal tax return. So there's another tax filing. What does that do? Increases your tax prep costs if you're using a tax preparer, which you probably should if you have an S corporation. So really, that more paperwork and admin, those higher costs on payroll, tax filing. Maybe you want to hire a bookkeeper to get things straight and keep things straight. And then I'd say like that other really big downside is potential audit risk and around paying yourself a reasonable salary. So I think that's like one that's overlooked a lot. I certainly have like a reminder for myself every year. Look at what a CFP would be paid in my area of the country with my experience. Compare that to what I'm running through payroll. We need to be able to defend this in front of the IRS because especially if you're going to be a high income business owner, your risk of audit is much higher than your neighbor who might just have a W-2 job that they've worked their whole life. So it's certainly a risk if we're not doing things right with payroll, filing, a separate tax return, and then paying ourselves a reasonable salary and being able to defend that. Okay, if we decided we want to make that S Corp election, hey, my income's profit is 125 or 100 grand, whatever it is, we expect it to go and grow 25, 50 grand a year or something like that. It's a no-brainer for us. Okay, great. Obviously, we probably want to have an LLC first if we don't have one already. Usually people have that. It's usually a first step. IRS form 2553 to elect S Corp status. So it's a simple form. You literally fill it out, mail it in, and congrats, you are now an S Corp. So you want to set up payroll and start paying yourself a salary right away. I did this at the beginning of 2023, 24. So the deadline to make an S Corp election is March 15th for the current year. So if we want to be an S Corp in 2025, we have to do that by March 15th. We want to then, once we've elected S Corp status, set up payroll and start paying ourselves a reasonable salary. We also want to make sure that we're keeping our business finances and personal finances separate and make sure we're tracking everything carefully in QuickBooks or some sort of accounting software. We know what's coming through payroll. We're making estimated tax payments. I guess that's probably another thing I'd add here. It has nothing to do with electing S Corp status, but once you have one, those owners' distributions coming to you will not have tax withheld. So you're going to have to track those and make estimated tax payments. But it's pretty simple to become an S Corp. File that 2553, elect S Corp status, get yourself on payroll, start paying yourself a reasonable salary, be able to look an IRS agent in the eye and defend that. Who maybe shouldn't elect an S Corp? Business owners making under 50K in profit, right? In my opinion, might not be worth that hassle, especially if that's variable. Again, like those that have variable profits that are going up and down, and that might be for different reasons, whether you're working less or less hard in the business, you're going to take a year off, you have a down year, you're very cyclical in your business. Maybe you're going to reinvest tons of your profits. So you're actually going to have no profit because you're, reinvesting in research and development. Well, it's really hard to pay yourself on payroll if we've got no profit, right? So S Corps need profit to make these things, worth your while. So final thoughts and action items. S corporation elections can be great tax saving tools for LLCs, sole proprietors. They have to be at the right time. You need to be making, in my opinion, over 50K in net profit. consistently with expectations for that to grow. We need to be able to pay ourselves a reasonable salary that we can look the IRS in the eye and defend that. And then we want to have good bookkeeping and accounting practices around that. Disclaimer, talk to a tax pro about any and all of this. This is not tax advice. You'll hear another disclaimer at the end of the episode, like I have at every episode, but definitely talk to tax pros about this. Just giving you my 2 cents as a financial planner and somebody that owns an S Corp. Thank you so much for being here. I really appreciate you listening. I really appreciate all the support. Let me know, reach out if you have any questions, and we will see you back in a couple weeks. Thank you for joining us today. Do you want the exact financial planning framework that I use with clients? Go visit baskinfp.com where you can grab a free download of the ultimate military and veteran financial checklist to give you the bluff on what you need to be doing to manage your finances. We'll be back next week with some more content to help you on your journey to financial freedom. See you then. This is a friendly reminder that the Bluff Finance Podcast is general and educational in nature and does not constitute tax, investment, legal, or financial advice with respect to any particular individual or taxpayer. Please consult with your own tax, legal, financial, and other advisors regarding your own unique situation.